Hey everyone, welcome back to the Economic Analyst channel. In this video, I'm going to give you an update on the market situation and what's playing out and the forces that are driving this. So the big thing that's going on in our markets post the new year after the Santa Claus rally is definitely the uptick in interest rates. When the Federal Reserve released their minutes and started indicating that they were going to take tighter monetary policy stances than what the market anticipated in order to combat rising inflation, that definitely started to send markets into a little bit of a panic, and investors have largely started to move as I predicted. Now, if you've been watching my previous videos, I have been making a prediction that what I personally thought was that gold and silver were undervalued, and that when interest rates went up, it would actually cause a move up in precious metals, okay? Because its undervalued status would cause that to be corrected when interest rates moved up, since money would start flowing out of the speculative growth-oriented assets into the undervalued safe haven assets. In this case, would be largely precious metals. And we're beginning to see that take place. Now, this is too early to tell whether this is the real move to be made and whether we're going to see the bull market that many gold bugs and precious metals bugs have been predicting, and perma bears predicting the imminent crash of the stock market. Who knows? But right now, we're definitely going to see the trends, and I'm going to give you what's been playing out the last month or so, and it's kind of proof in the pudding of what I've been saying would happen. We'll see if that plays out as the new year gets into it, or whether investors sort of regain their mojo and confidence in traditional investments and start causing a rallying back in the more growth-oriented assets. So right now, the 30-year mortgage interest rate in the past month has started to go on its uptick. This has been caused by the force up in the 10-year Treasury. So back about a month ago, we can see how the 10-year Treasury was, kind of piking around 1.5%. It's now forcing its way up to almost 1.8%. It's currently around 1.75. So a 1/4% hike in a month. It's really started to undergo toward the end of the new year. And again, a lot of that had to do with the Fed and the expectations that the Fed was going to start combating inflation by selling off their Treasury assets. So more supply of treasuries, price goes down, interest rates are getting forced up. No surprises there, but the big thing is that in the last month, we're starting to see that uptick in precious metals. So both gold and silver have rallied by over 1% in the last month. Really, silver has rallied by over 2% in the last month, gold by 1.5%. Not a big move per se, but if you think about it and you annualize it, for gold, that would be an 18 to 20% return. For silver, that's close to a 25% return if you annualize that monthly growth. Meantime, as I predicted, stocks would take a hit. The Wilshire 5000 is flatlining. That's the most aggregate range of the index for stocks, and the NASDAQ 100 is certainly corrected a little bit. It's down 3% for the last month. And then the big one has been Bitcoin. Bitcoin was one that I personally thought was very interest rate sensitive. It would function a lot like the tech stocks did during the 1990s and 2000s. So a rise in interest rates would give it a punch in the nose. That certainly has played out, as we have seen. So toward the turn of the new year, Bitcoin has dropped by a whopping 10% plus. And really, it's been on a downward trend since November. This is about the time that the Fed had sort of admitted that inflation wasn't transitory and that they would start ramping up procedures to try to combat inflation, including ending asset purchases, raising short-term interest rates, and even possibly selling long-term assets onto the market. And if so, that could suck out a lot of liquidity out of these growth sectors. But I also thought it would result in a net move of liquidity, aka money purchases, into precious metals, because those have been, very much underappreciated and underlooked throughout the COVID. And early on in COVID, when we take a look at the last couple of years, we see the push up in precious metals prices, but then they sort of just been lackluster for the last year and a half or so, and have been sort of just in a bear market. But what I have personally thought was that the low interest rates were actually working against it, not for it, because they were pushing up precious metals competitors. In this case, the stock market and then Bitcoin. So when those forces would reverse, we would start seeing those money moves back into precious metals. That looks like it's beginning to play out now. Now, of course, it's too early to tell, because if we take a look at the 6-month trend for precious metals, gold has been largely flat, aka slightly on the downward side. Silver's definitely taken a hit in the last 6 months. It has dropped by about 15%, actually a little bit more than 15% in the last 6 months on that. So just keep that in mind, that just because of what we're seeing in the 6-month trend does not mean that we've seen the full reversal yet, but it could be the arbitrary signal that with the 1-month trend pushing against it, with gold and silver pushing up, stocks and Bitcoin pushing down, we could be seeing that reversal. So over the last 6 months, yeah, stocks were up, the NASDAQ was up, Bitcoin was up, gold and silver was down, but in the last 30 days, it's been the reverse. Silver and gold are starting to push up. Stocks on the aggregate scale have been sort of flatlining themselves. And then in the more speculative areas, aka tech stocks, they've been pushing down. And Bitcoin certainly has taken a beating in the last month or so. And this could just be the beginning right quick. So just keep that in mind about, how all of this plays out. Again, Bitcoin dropped by over 10%. According to this chart, it's actually dropped by 15% in the last month. And, stocks, again, are appreciating in the right direction, but it's yet to be seen whether that's going to cause a full-blown escalation and a reemergence of precious metals into the bull market. These are some of the things that I'm going to keep in mind, and one of the things that I'm going to personally speculate on is the inflation numbers come out. If they're very much worse than what's been anticipated by market expectations, then we could definitely see another push up in gold and silver. Also a move up in the interest rates, because again, it would reinforce the narrative that the Fed needs to hike interest rates now, not later. And again, I know that interest rates work counterintuitive to gold because it raises the opportunity cost of gold, but just remember, it also raises the opportunity cost of stocks. It raises the opportunity cost of alternative assets, in this case cryptocurrencies, and that works to gold's favor. Since gold and silver have been undervalued, I believe, for the past several years, stocks have been really overvalued, and especially Bitcoin. This will network to gold's favor, I believe, as it plays out. I don't know for sure because I'm not a prophet from God, but so far so good in the last month. Seems to be that my little theory has been playing out in the precious metals market. We'll see how things go, and I'll keep in track on this. Of course, you guys look out for my inflation reports that I'll release out tomorrow and Wednesday, and I'll probably give another update on the market expectations going forward on Thursday, as we see a lot of volatility going on, and I do expect if the inflation numbers come out and they're bad, we might see some very volatile moves in the markets, some corrections taking place on both the undervalued and overvalued scale, and possibly even some messages from the federal administrations on both the monetary and fiscal side addressing these concerns that goes on for the investors and the public at large. So guys, stay tuned for that. If you like my content, make sure you just click that like button. Subscribe to my channel if you haven't already. Share. You're more than welcome to share my content on whatever social media that you want to. The name of the game is to get this information out to the public and alert them to what's going on and where the moves are being made. There's a lot of wealth transfer effects that are going on that I think will take place over the next coming years. And always click that notification bell if you haven't. That way you're notified as soon as I upload one of these videos. I'll probably upload at least 2 more, probably 3 more for this week before we close that week out because of all the action that's been going on. So once again, just stay tuned for that, and I'll talk to you next time.